there, welcome back. Still watching Market Fatafat on 80 now. Let's keep it going with all the big buzzers in today's trade. And now on the technicals, and we welcome on board Sameet Chavan, the Chief Analyst, Technicals and Derivatives at Angel Broking. And Sameet, you've picked out HCL Tech for us. Now, if I take a look at this stock, it seems like after a slight bit of some consolidation, it's starting to recover again. So what's your view on the charts for HCL Tech?
Hi, good afternoon. See, clearly IT has been, buzzing since last couple of weeks, and HCL stock, HCL is the one stock, that has been clearly outperforming some of its larger peers. As far as its technical structure is concerned, the stock has already seen a V-shaped recovery from, May's low. There has been no stopping. If you see in between a couple of attempts of profit booking were witnessed, but all these attempts were bought into. So overall, if you see, the undertone is strongly bullish. The stock has now entered its uncharted territory, and considering the overall momentum, we expect continuation of this move. So at least with the short-term view, 1900, 1921 cards. But if you have to take a slightly medium to long-term view, will not be surprised to see this stock surpassing 2000 in current calendar rates.
Right, Sameet, in fact, HCL Tech, it is very close to its 5 trillion rupees market cap. So I think with that, probably it will touch that. But let's move on to another stock, Zydus Life Sciences, which is in focus today. It is on the back of two news flows. UBS Principal Capital Asia has offloaded 0.66% stake at an average price of rupees 1,128 rupees per share, which is amounting to 756 rupees. Crore rupees, I beg your pardon, and on the back of that, it is reeling under pressure. In fact, the second piece of news is that they have also received the final approval from US health regulator to market its sconpoline transition system, which is indicated to prevent nausea and vomiting under different circumstances. And the approval granted by US FDA is to market the drug, the dosage of 1 mg per 3 days. And Zydus Life Sciences said that in a regulatory filing post market hours on Friday. And on the back of that, in fact, the block deal is weighing in on the stock, and this counter is trading down with a cut of 1%.
That's the word coming in on Zydus Life. That's why the stock is buzzing. Now, we spoke about Biocon, we spoke about Zydus. Let's also keep it going with the pharma pack and speak about Dr. Reddy's now, because pharma seems to be a sector that is losing away in today's trade. Nifty Pharma also 1% down as of now. But shifting spotlight to Dr. Reddy's, these shares have been sinking in the red after the Chinese drug regulator, National Medical Products Administration of China, which is the NMPA, has decided to suspend the import, sale and use of the pharma giant's atomoxetine hydrochloride capsules. In a filing with the exchanges, Dr. Reddy's lab said that the NMPA China has recently conducted a remote inspection of the firm's formulations manufacturing for this hydrochloride capsules, and this is a capsule which is used for treating ADHD in adults and children. The NMPA concluded that the production quality management of these capsules does not meet the requirement of China's good manufacturing practices for drugs. Therefore, it decided to suspend the import, sale and the license and the use of these capsules from Dr. Reddy's. So negative news flow coming in, and as of now the stock also at the lowest point of the trading day, more than 2.5% cut coming in on Dr. Reddy's.
Absolutely, that's Dr. Reddy's down and out in trade with cuts of 2%. But Sameet, the M&M Finance is what you picked out for us, and this stock is clearly it's trading towards 52-week highs, it's hovering around that. Tell us, is there more steam? There's more upside. What do you see on the charts?
Yeah, certainly looks like stock has already broken out from its multi-month, concession zone. This particular stock is now, trying to regain its momentum. If you see, the stock has lost its momentum in last, many months now. So this stock seems to be, finding its mojo back. Overall, if you see, stock has broken out from important resistance level, and we can now see a bullish flag pattern, that is forming on daily time frame chart. So overall, the bias seems positive. If you look at the volume activity, it has risen substantially, so that provides some sort of credence to the move. Hence, we expect continuation of this, ongoing momentum. Whereas as far as levels are concerned, 335, 338, these are the next levels to watch out for. Any dip from current level would be a good time.
Okay, so that's the view coming in on M&M Finance. Ansh, coming to you, you've picked out TVS Motor for us and our viewers. Tell us what's the news flow here.
Right, so the company has actually launched its TVS Raider 125 in Sri Lanka. Also, Mr. Githal Anthony, CEO of TVS Lanka, has expressed his enthusiasm about the launch of this TVS Raider 125 in Sri Lanka, and he also said that it will be the most exciting product added into the TVS Lanka portfolio. He also highlighted that TVS Lanka, as a vehicle assembler in Sri Lanka, had the privilege of assembling the TVS Raider 125. Also, if you see on chart in morning, we saw that TVS Motors opened with a gap up opening, touching that record high level, gaining around 2%. But due to market pressure, the stock has come down and slipped into red for now.
Right, moving on to another stock, another auto stock, that is Eicher Motors, which is in focus today. In fact, it is on the back of the auto sales number for the month of August, and as you can see, the company didn't do as well as the other companies, and we did see a fall in sales of 5% to 73,623 units versus 77,583 units on a month-on-month basis. The Royal Enfield sales, the exports also dropped 2% to 8,000 units versus 8,190 units. The commercial vehicle sales grew 1% to 6,543 units, but the commercial vehicle domestic sales also increased to 2%, and the commercial vehicles export saw a decline of 23%. So you can see the exports have dropped for both Royal Enfield and the commercial vehicles. Exports saw a decline, plus there was a domestic sales fall for Royal Enfield. So on the back of that, Eicher is reeling under pressure, currently trading with cuts of 0.7%.
Okay, so that's on Eicher Motors, but while we're talking about the auto sector, let's keep it going and now talk about Maruti Suzuki, because as the slowdown deepens in the car market, India's largest car maker, Maruti Suzuki, has announced a reduction in prices of select variants of two models. Effective from today, price of Espresso LXI Petrol, originally priced at 5.01 lakh, this is ex-showroom, has been reduced by 2,000 rupees. Meanwhile, price of the Alto K10 VXI Petrol has been reduced by 6,500 rupees. And ET now Sameet Chavan is joining us with all the details on the price cuts that Maruti Suzuki has undertaken. Sameet.
Well, overall, it's a price discount, not discount, it's a reduction, it's price reduction. Yes, you're correct. And it is significant because it's after many, many years, Maruti is cutting prices of cars. It is in addition to discounts which have been given. And this is significant because when Maruti does it, others have to follow suit, because Maruti has around 50% of the market still. Maruti's mini car sales have been on a decline. In August also they fell, and looking at that, company has given this kind of a price cut. Well, in other automakers' case, Mahindra and Mahindra, Tata Motors, they both have also given price cuts on their vehicles. Discounts are separate, remember, and that's given from one sector to another sector, but price cuts are across the country. This shows the kind of glut, the kind of inventory overhang automakers are facing. Automakers, dealers are there different saying. Dealers saying that inventory is at 60 days. Automakers, other car makers are saying it's 40 days. However, yes, inventories are a big problem, and especially coming just before festival season, it's a big problem coming for auto market as the market is coming down and automakers are restoring to price cuts to pump up the demand. However, it's a good news for automakers like you and me, auto buyers like you and me. If you want to buy vehicles, it's a good time.
Okay, thank you so much for all those details. Maruti Suzuki, a stock in focus on the back of that news flow. But let's move on, talk about NBCC and two triggers for this stock and why it's performing 1% higher as of now. Now, the first one, the company has announced that it has won orders worth 182.5 crores from the Oil India Limited and also from Indian Statistical Institute Delhi Center. The order from Oil India is worth 180 crores and it involves the construction of two multi-story residential buildings, office building and recreation center with auditorium facility with state-of-the-art features. The oil pipeline headquarters this is for the oil pipeline headquarters in Guwahati. Additionally, the company will also carry out the rehabilitation of the Platinum Jubilee Hostel at the ISI Delhi Center in New Delhi, the value of which is 2.5 crores, making the total order value worth 182.5 crores. Also, the second trigger is over the weekend, NBCC's board has also approved the issue of bonus shares, where it will be issuing one bonus share for every two shares that is already held in the company by the shareholders, and the record date for this has been fixed as October 7. So, two news flows for this company, and NBCC up 1% as we speak.
All right, that's NBCC in focus today. But Sameet, SBI Cards is what you have picked out for us. The stock hasn't really done much in the last 6 months, but I can see the stock move a little bit in the last 1 month, like 4 odd percent. What do you see on the charts for this one? Where is it headed?
Yes, it has certainly not done much in last few months, but it is likely to do well now. At least it is showing some early signs of revival. Stock has been forming a strong base around the 690, 700 odd levels, and since morning we are seeing good traction in this counter. It's on the verge of a breakout. So once this stock surpasses 745, 748 on a closing basis, we can see the stock coming out of its long slumber phase, and then probably the stock can give a sharp move towards 780, and then probably 800 plus levels cannot be ruled out. So the bias remains positive. Wait for a breakout to happen on a closing basis beyond 745, 740.
Okay, so those are the levels that Sameet is spotting on SBI Card. But Ansh, you've picked out CESE stock, not doing all that much. But tell us why you've picked this out for our viewers.
Right, so Purva Green Power Private Limited, a subsidiary of the company, has incorporated a wholly owned subsidiary company named Green Pulse Power Private Limited (GPPL). Now, this GPPL will explore opportunities in renewable power sector, which is positive for the company. Also, if you see on chart, then the stock had actually formed 3 black rose candlestick pattern, which was a bearish sign, but today it seems to be snapping that bearish pattern, which is positive for the stock.
All right, that CESE CS by Ansh. But let's move on then to the macros. India's Q1 GDP growth slowed to 6.7% in the first quarter of FY25. This marked the lowest growth in the last 5 years. Now, the growth has fallen short of the RBI's projection of 7.2% for the same period. Now, let's go across and hear out the word coming in from RBI Governor on what he makes of this Q1 GDP data.
As I mentioned in my speech, yes, for the first quarter this year, our projection was, Reserve Bank's projection was 7.1%. But actual number which has been given by the first advance estimates given by the National Statistical Office is 6.7%. Now, obviously, 6.7%, would give an impression that, it is lower than 7.1, goes without saying. But if you look at the components of the GDP, the main drivers of the GDP growth, whether it is consumption or it is investment, or from the supply side it is manufacturing, services growth, construction sector growth, I think all the sectors, the growth is 7% plus in the first quarter. Two aspects which have slightly pulled it down. One is government expenditure, which is both central government and state government expenditure. Other thing which was slightly lower was agriculture, which grew, I think, at about 2% or so.
Coming in from Governor Shaktikanta Das. But on that note, we'll slip into a very short break on this edition of Market Fatafat. More buzzing stocks on the other side.
Welcome back. You're tuned in to Market Fatafat, where we are taking you through all the stocks that are buzzing in trade either on the back of research, news flow or technicals. So, well, let's get started yet again. Then NHPC, Railtel are the stocks in focus today. Why? Because the government of India has granted them the Navratna status in India. In fact, we can see NHPC trading with gains of over 2%, and Railtel is gaining with in trade with gains of 1.5% right now. Now, there were a total of 16 Navratna SPSEs, 13 Maharatnas, 55 Mini Ratnas, and 11 Mini Ratna SEPCs till last month. In the listed space, Irida and Hudco were granted the Navratna status earlier this year, and now NHPC and Railtel have also been added to this list of Navratnas, and on the back of that, we can see both the companies buzzing away in trade.
Okay, so those are two counters that are buzzing away on the back of that Navratna status. Ankita spoke about Railtel. I'm going to keep it going with these railway stocks, and I'm going to talk about RITES today, Ankita, because that stock also doing pretty well, and shares of the state-owned RITES rallied nearly 3% today, but seems to have given up all of those gains, and almost at the lowest point of the trading day as of now. They reached as high as 666 rupees today, almost 3% higher, after the company announced it had emerged as the lowest bidder for a $26.74 million project from Tanzania Railways Corporation. The project involves the supply, testing and commissioning for 4 diesel multiple units, and the estimated value of the bid is $26.7 million plus value added tax. But positive news flow, but it seems like the stock did not hold on to those gains, reversed all of those gains we saw in the first half of today's trading session, and as of now trading almost flat but with a slight negative bias.
All right, moving on to Indus Towers, which is also, trading with cuts of over 4% in trade today. Sameet, you picked out that counter for us. Last 6 months given us good gains of around 60 odd percent. Tell us what you see on the charts for this one.
See, after a massive rally, this stock is now seeing some profit booking at higher levels. With today's price action, it seems that for a timing we would see some consolidation with a negative bias, wherein 450, 455 would act as a very strong resistance on the lower side. There's a strong immediate support around 430, but once the stock slides below 430, we could see extension of this profit booking towards say 418 to 412. So overall, for time being, one should avoid getting into this counter, at least on the long side. Some sort of consolidation with slightly negative bias is on the cards.
Okay, so that's the view coming in on Indus Towers from Sameet. But Ansh, coming to you now, you picked out Godrej Properties, and tell us why this stock is in focus today.
So the company has announced that it has emerged as the highest bidder and has secured the letter of intent to develop 2 group housing plots in Gurugram through an e-auction conducted by Haryana Shahri Vikas Pradhikaran, which is HSVP. Now the combined bid value for both the plot is around 515 crore. The land parcel together will offer a development potential of over 1 million square feet and an estimated revenue of over 3,400 crore, comprising of residential apartments. So for those reasons, the stock is in focus today.
All right, with that we have come to an end of all the stocks that were in focus today. So Ansh, Sameet and Aditya, who joined us in the first segment, thank you so much to all 3 of you for joining us. But we'll move on to the macro picture for India. India is well positioned amongst EM peers, according to Chetan Seth, Asia Pacific equity strategist at Nomura. Listen in to what else he had to say about his call on India.
Our view on India has been consistently and very clearly, it's been that you buy on any dips in the market. And at this stage, our view remains the same, that this market still looks quite well positioned in the emerging market universe as well as in the Asia ex-Japan universe. Now, of course, this cannot continue, so I'm not here to suggest that things will always go up. If you look at our index targets for, let's say, Asia ex-Japan markets, which is what I cover, we've got very limited upside. If you look at the index target that our India team has on India, it's got very limited upside, and there are reasons for that. But our view is that, look, if there is a cyclical downturn in the economy and let's say earnings and let's say stocks do come off, we'd be buyers on dip. So I would say generally we are, I would say, constructive. Our stance is, if we get weakness, we'll be constructive. But on the global front, there are lots of risks and challenges that we need to keep into mind.
Okay, so that's the word coming in from the spokesperson at Nomura, but the Chief Economic Advisor V. Ananta Nageswaran cites the elections for moderating GDP growth in the quarter gone by, but also adds that they are seeing better capital formation in the economy. Let's go across and listen.
Obviously, the first quarter we saw a decline in capital formation rates, not the growth rates, not the absolute amounts. But I think that is because of the election season. It will pick up because the overall tendency, if you look at the RBI's August monthly bulletin, the funds raised by the private sector for capex have consistently been steadily increasing. So therefore, I think we do see brighter capital formation prospects in the private sector, and also the government's capex spending will also pick up in the coming quarters. I think first of all the base has gone up, so therefore the growth rates will naturally be lower compared to where it was 3-4 years ago. So I don't think, yes, I think we need to watch for employment generation, income growth and consumption trends, but right now there is no cause for concern per se.
Alright, moving on to an ET Now exclusive then. Top institutional shareholders of UTI Asset Management Company have revived a proposal to sell their equity stakes in the mutual fund. Now, sources inform the Tata Asset Management Company has emerged as a frontrunner as a contender seeking to acquire their collective holdings. If successful, the deal could be worth $800 million. Anurag Joshi joins us with more details on that.
Top institutional shareholders of UTI Asset Management Company have revived a plan to look at a proposal to offload their equity stake in the mutual fund. Tata Asset Management has emerged as a front runner in the transaction, sources tell us. Last year, Tata Asset Management had looked at UTI Mutual Fund, but the transaction did not go through because the talks had stalled. Now, if a successful transaction does take place, the value of the transaction for the 45% equity stake that the institutional shareholders of UTI AMC are likely to put on the block will be about 6,700 crores. So that's $800 million. Now, these institutional shareholders are Bank of Baroda, LIC, PNB, and SBI. Punjab National Bank has the biggest shareholding among them, and this followed by Bank of Baroda, PNB, and SBI, who have roughly about 10% equity stake in the company. Now, Tata Asset Management has equity stakes of Tata Sons, which owns 68% in the AMC, while Tata Investment Corporation owns 32% in the asset management company.
Okay, thanks Anurag for all of those details. But with that, it's a wrap on this edition of Market Fatafat. But while we bid you goodbye, let's also take it across to the sidelines of the Bioenergy Summit, where Praj Industries CEO and MD Shishir Jaipura lauds the government's move to remove the cap on sugar juice supply, also shares their capex plans. Let's go across and listen.
Feedstock that's available across the country, and that will make it possible for us to actually ensure that we are not only able to meet the E20 program's aspirations, which I'm sure we will, but also create a pathway for the future development of biofuels in the country. For example, today the EBP20 program just focuses on blending of ethanol into petrol. What about diesel, which is 3 times as much volume in our country? So there has to be a biofuel addition to that large volume as well. In 2027, we will start needing ethanol for production of a sustainable aviation fuel. Now, for every molecule of aviation fuel that I need, roughly 2 molecules of ethanol will be required. So that means there is a growing demand for ethanol. And if there is a growing demand, of course, it's very normal that we create a pathway that makes it possible for us to broaden the base. And this is just the beginning. To me, this shows a great deal of commitment from the government to ensure that the biofuels actually go forward and we don't just take any step back.
Question on your capex plans and investment plans for this year. Are they on track, or are you increasing them? What is your plan as far as capex and outlook for the industry and your company is concerned?
So we've already, as I was mentioning, we have already invested about 100 crores into our facility in Mangalore, and we'll be further augmenting it. The big part of my investment actually goes to technology development and not so much into infrastructure development. And that is something that's a continuous exercise. We just finished the 60 crore investment for our lactic acid project. So that's the level of investment that will continue as well.
If you like this video, then like, share and subscribe to ET Now.